Kenya had the highest number of projects in East Africa in 2015, and this is according to Africa Construction Trends report by Deloitte East Africa. Also, another study by Metropol Corporation suggests that the country will grow by 5.5% this year, driven by expenditure in mega projects. Take a look. Kenya's economic growth in the near and long term has in the recent past been pegged on heavy investment in infrastructure projects. For instance, credit rating agency Metropol Corporation predicts that the economy will expand by 5.5% in 2016, driven by implementation of the standard gauge railway between the coastal city of Mombasa and Nairobi, road tarmacking programs, and last-mile electricity connectivity projects.
The growth is because of the implementation. We are not talking about because of the production. We are talking about the expenditure in implementation of the projects. That is what is driving growth. Let me explain it like this. To build the SGR, you must buy cement. So all these companies here in Athi River are selling plenty of cement. To build the SGR, you need all kinds of various grades of steel. So many of these companies that deal with various grades of steel are, selling. You need ballast. So many people with crushers are selling. Yeah. Now, if you think about how the SGR is financed, the credit from China Exim is an introduction, is a new flow that you have introduced into the Kenyan economy, and it is going to buy cement, ballast, and so on, and employ nearly 10,000 people.
According to Africa Construction Trends report of 2015, Kenya had 20 infrastructure projects in that year, most of them in energy and transport. The growth in implementation of these projects is partly attributable to introduction of public-private partnership approach by the government.
One of the prime things that has been done is to improve the legislative and regulatory framework for PPPs. And Kenya has been leading the way on that with the enactment of the PPP Act 2013 has really improved the climate, made it much easier to be able to undertake PPPs. And we're just starting to see the benefit of that now with the prioritization of projects which the PPP unit has undertaken, leading to the initial benefits through the power sector, but now looking at the road sector as the second, where there are 5 projects which are underway. And so I see that as increasing. Within the next 2 to 3 years, that will increase substantially. And I think it will then migrate into other sectors which are following on from there.
The projects are expected to deliver shared benefits for East Africa, with most of them being implemented with the goal of achieving integration of markets within the region.
I think when you look at the amount of development that's going on, where you have the major investment that's driving some of the economic growth, is not around country-specific investment, but how it's impacting the economic corridor. So for example, like the LAPSET development program, where that will be a corridor that goes from Kenya, Ethiopia, South Sudan, and some of the surrounding areas. Also with the standard gauge railway that goes from Rwanda all the way to Uganda, that'll be built over time. Those are helping generate economic growth, not just for a country, but for the economic corridor. And I think that's what we'll see really over the next decade.
As an economist, I must tell you, I believe integration is a good thing because you create bigger markets. When you execute projects on a regional scale, again, you are improving logistics for the entire region. You are improving productivity for the entire region. The other point I think you need to look at is the growth in our neighboring economies. And all our neighboring economies are moving at a very rapid speed. So what tends to happen is like the tide. The tide lifts all boats. It may lift some a bit higher, but if the tide comes, it lifts all boats.
Development of infrastructure projects in 2015 happened amid a volatile economic environment, one marked by high interest rates, a depreciating currency, and rising inflation. Experts say that global liquidity is one factor to watch this year if the flow of infrastructure-related foreign direct investments is to be sustained.
I'd say two major issues that we're looking at. That's around liquidity issues, global liquidity issues, and what the kind of funding can flow in to East Africa and specifically within Kenya. But we're also looking at, for example, the currency trade, where you look at the exchange rate between Kenya, the US dollar, and other foreign currencies, where that must be carefully watched. Because right at the moment we've had maybe a decrease of maybe 10% or even more. So that creates quite a significant impact on the investment on big infrastructure programs. So that's something that we clearly are looking for and clearly looking at. And then the other issue is around political stability and around perceptions as it relates to fraud, bribery. Again, what we typically find is that the perception is usually much worse than what the reality is.